All right, welcome back everyone. We're going to be doing another important chapter today in our series for Builder's Guide to Accounting. Today we're doing chapter 14, which is cash budgeting. It may sound like it's something very, very simple, but I really want to make sure that you understand the information in this chapter and that you review the information in this chapter and that you read the chapter on your own, because I know I keep saying this, but this is a very, very important chapter. And it's not a large chapter. It's not going to take that much time for us to cover it or even for you to cover it. But definitely make sure that you read this information and you review this information and you're very, very comfortable for this information. Because I remember from my experience, this is exactly the kind of chapter where a lot of questions for the exam are pulled from. So let's get into it. Chapter 14. Starts on page 173, cash budgeting. Budgeting for cash requires an understanding of future needs, a clear plan for acquiring fixed assets, building inventories, and collecting receivables, and a strong set of cash controls. Pretty simple overview. I think it's pretty simple to understand, kind of common sense. Right towards the bottom of the page, here is a list of what a good cash budget can accomplish. Make cash available for day-to-day and month-to-month operations. Plan for the use of excess funds when they are available. Time operations for seasonal business changes. Plan adequate levels of inventory in advance. Serve as a model for the control of receivables and collections. Budget loan payments. Prepare for tax liabilities. Taking advantage of discount terms. Help you improve and maintain a good credit rating and qualify for needed loans. Control the purchase of materials and help prevent over and under buying. Okay? Very, very important. I think that's exactly the kind of information that a test question can be pulled from, because these are just bullet points. And I know that on my exam, there were a lot of these. No builder can afford to ignore the problems that result from poor management of cash assets. When lenders examine your financial statements, they look closely at your recent cash flow. Testing the cash position, okay? The first test is called the current ratio. Look, I even underlined it in two different colors. Very, very important. Understand what the current ratio is. It compares current assets, cash, receivables, inventories to current liabilities, current notes, accounts payable, and accrued taxes. Current means within 1 year. That's a test question right there. Okay, they're going to ask you what the term current means. Understand that when they're talking about current ratios, current means within the year. Super important. Okay, over here on the bottom of the column, try instead to reduce your current liabilities rather than increase your current assets. Very, very important. Next page. One variation of the current ratio is called the quick assets ratio, also known as the acid test, because it tests working capital the same way as the current ratio. It's a variation because it's computed the same, except that inventory is excluded, okay? Inventory is excluded, that's the key. Next, we're on page 176, preparing a cash budget. There are two principal ways to prepare a cash budget or forecast: the cash movement method and the source and application of funds method. Two methods, know that. The cash movement method. The cash movement method involves budgeting only the flow of cash in and out of your business, okay? Don't list additions to accounts receivable, as no cash changes hands in charged sales, okay? This method is especially valuable for builders who have wide variations in their business volume from month to month. The source and application of funds method. The source and application of funds method is more precise than the cash movement method that we just discussed. It assumes that you will attain a certain level of net income. Then it adjusts for non-cash changes to arrive at the net increase or decrease in working capital. So to know what these two are, the cash movement method and the source and application of funds method. Pretty important. Okay. Next, we're on page 178, figuring a break-even point. You reach a break-even point when your profits fall to zero. The break-even point has a very specific use. It doesn't distinguish between the various yields of the different jobs and the job types you do. It can't help you decide what kinds of work you need to reach a volume goal. A break-even point doesn't encourage growth. It merely tells you the minimum sales you need to break even and serves as a reminder to maintain a strict cash budget to better that goal. I mean, in here, there's essentially a definition of what a break-even point is. Definitely know what it is, okay? I think it's very important. For example, on a volume of 150,000 with a direct cost of 60%, selling expense of 22.5%, and fixed overhead of 28,000, you could project a loss of 1750. Thus, the break-even point is slightly higher than 150, okay? There's math in here. I'm not gonna get into all of it. I think it'll take a little bit too much time than we have for this particular video, but they're essentially giving you an example of how to reach a break-even point. Follow that, and I don't think you should have any issues. This is not calculus, this is basic math, okay? Follow along and you'll be fine. Cash controls, a bunch of forms. I don't think these forms are too important, so we can kind of skip these. And that's pretty much it. Like I said, very important concepts, very important topics, not a lot of content, just kind of a couple of really important key things that you need to focus on in the chapter. We're on page 184, and that's where the test questions are. Once again, I encourage you to do these test questions because they're very, very similar to the kind of questions you will see on the actual exam. So if you do these practice questions and you don't have any issues and most of the content is within your grasp, I think you'll be fine, and I think you're pretty much ready with the information in this chapter. That's about it. I'll see you in the next video. As always, I appreciate you watching this. If you have any questions or comments or concerns, or you want to say something, definitely reach out in the comment section and I'll do my best. That's it. Thanks for watching. See you in the next video.